Welcome, folks. If you recall from my weekly analysis video, I provided you with two levels. I said that this is the level where I want to see the market come back down into, and this is kind of where I would expect the market to reach up into and perhaps find some resistance. I also mentioned that we are heading up to 2800. That's kind of the level that I provided. You can see that we've gone through what I thought might have been resistance. We've come into the support area, okay? And we are on our way to 2800, okay? So I'm not sure if we'll hit that or not, but we certainly are at premium pricing. At this point, I personally would not be looking for taking any long positions simply because we are now at premium pricing. We're getting close to the end of the month, and there is a risk that long traders might be trapped up high, and I don't want to be trapped up high because I do expect some kind of a pullback, okay? So if you don't recall where I got these levels from, then go back and review the previous weekly analysis video, okay? So in VIP, we have been trading from those levels. So let me just take you through that. I've already done a couple of videos on some of the trades that we've been doing in VIP, so go and watch those. But you can see that's the blue line that I mentioned in the weekly analysis video. We've come into that at the start of the week, okay? And we have rejected off that. And in VIP, we've taken some longs at that level. And here also in the New York session on Monday, there have been some long setups. Okay, timing is important. So you can see, and I've already mentioned this in previous videos, specifically about how we traded Monday. So go back and watch those. There was bullish order blocks in that zone. Okay, even here at the London, New York gap time, there were entries, but 9 a.m., 7 a.m., they're key times. Okay, so 7 a.m., 8 a.m., 8:30, 9 a.m., 9:30, they're all very key New York times to look for your ICT bullish signatures if expecting bullish. Okay, so bullish order box there that we traded off. Now, this is interesting, okay? On Tuesday, typically what I like to see is when the market takes out a previous daily high. For example, on Tuesday, the market has traded above the high of Monday, right? So we have a breakout of Monday's high on Tuesday. I like to see that as a false break and a reversal back down to the low of the week, okay? That's what I like to see. Now, that doesn't mean I'm automatically short just because we've broken above a previous daily high. I want to see a setup, exactly as what I've explained here, what you see. Now, we don't see that false break reversal. Instead, what we do see is that the market is sitting on top of that previous daily high, okay? It's consolidating, right? And that is indicative of a large move pending. At the same time, the day prior to Tuesday, which is Monday, we have a very tight, small range day, okay? If you look at Monday, it's contained within the Friday's high and low, right? So I've spoken about this previously in other videos. So when you have a market that, so this is the high of Friday and this is the low of Friday, and Monday's trading has been contained within that high and low. This is known as an inside day, okay? Now, the day following an inside day is typically a large range day. If it's not the day after the inside day, it'll be the following day, okay? That's what is expected. And we should be trading in alignment with higher time frame direction, right, from that inside day. So if we're expecting a large range day, the following day after an inside day, we should be expecting movement in the direction of the higher time frame, okay? So then on top of that, as I said, we have an inside day here on Monday, and so we're expecting Tuesday to be a large range day. We see that the market is coiling, okay, after having an inside day, knowing directional bias is to the upside, as well as we have, at this point, we still have the weekly high intact, okay? So we still have the weekly high intact from or last week's weekly high of last Wednesday, okay? Now, having that information, we can do a few things. One, in New York, we can look for bullish signatures, right, to look for repricing higher at the right time. So here is the open of New York, ICT cool zone, okay, 7:15 a.m. candle takes that liquidity, okay, that's our bullish order block, okay, we can move up and we trade back down into that. And the time's important. This is the 8:45, 9 a.m. candle. Okay, move up into bullish order block for repricing higher. So we traded this in VIP, and my guidance for VIP this week was pretty simple, to just take 50, 60, 70 pips, okay, and just lock in profits because we're at the last week of the month, we've got NFP, and we're expecting a lot of manipulation, okay? You can see in this coil, there's been a lot of manipulation. So VIP were in this paper trade demo account for a nice move up to these highs, okay? 50, 60 pips, easy 70 pips, but VIP is locking in 50, 60 pips on these trades for this week, okay? Using this coil or this consolidation, we can also take that consolidation, right, which is this here, and project where might this move be headed, okay? We don't necessarily have to take the best exit. So if I just take my Fib tool and just mark out the high and the low, let me just change this color to something that's different to what we already have, okay? You can see that, and let me actually do a range projection. Let me just add a range, so there we go. So that is where the range projection comes in from that consolidation, our target, if we wanted to use that consolidation and project up and hold our long, target would have been 2766, which we have currently smashed through. Now, I believe that is the actual target, and this current move, in my view, is just to trap traders, and I think that we will get back down there sometime today. Okay, now that's not a trade recommendation. Monitor the price, try and learn from what I'm showing you here, and just review price live if you can, sit in front of the computer and watch how this setup forms. Okay, so using those range projections is pretty powerful, right? Using that consolidation from that high to that low, just using the body candles, ignoring the wicks. You can use the wicks as well. We can project a potential target from any long from that bullish ICT signatures. VIP simply targeted these equal highs. That was an easy target, right? We're looking for easy targets in this week. We have NFP, we're at the last week of the month, so we're expecting a lot of manipulation. So we're just nimble, which was my instructions to VIP for this week, and they've been able to lock in consistently 50, 60, 70 pips, even 100 pips on each day this week. So VIP have had an amazing week again, and we're looking forward to the remainder of this week. Okay, so there's a couple of ideas for you. Okay, now if you jump down, let me just turn off all these lines for now, just to make this a bit cleaner. So you have your bullish order block at the right time, okay, coming to another bullish order block, okay, for repricing higher, where we have relative equal highs above. So any potential entry from here, a safe exit would be there. Now, the entry from the bullish order block at the right time in New York also was valid because we have previous weekly highs still intact. So there's a lot of liquidity residing above the market from our entry, okay? Plus we have an inside day before, and we have a consolidation, which is basically the market ready to move, okay? So lots of different things there that we're looking at to validate our setup, okay? Now, sometimes these setups are easier to see on a 5-minute time frame. Okay, I'm just going to jump down into a 5-minute time frame. And you can see here that you have this consolidation, okay, on top of the previous daily high, okay? Then you have displacement, right? So even at 9:30, you've got a nice clean entry, okay, where you have your bullish order block. So you got bullish order block down here, 3 down candles taking out liquidity, okay? You have fair value gap displacement coming down into this fair value gap. So there's a lot of opportunity there for anyone to enter their positions for longs, right? The institutional traders, large fund traders are using those fair value gaps, right, with these bullish order blocks at the right time to accumulate their positions, right? That's 9 a.m. coming into that fair value gap, that bullish order block, okay? Now, that's after having this displacement, right? This move up with fair value gaps, so coming down into that fair value gap, that bullish order block. And time here is important, right? It's always about time. So that is right at 9 a.m. Now, if traders can't see that, or they're confused with all this consolidation and they think that may just be part of the consolidation, it's about time. You've got to be watching time. You've got to be watching the clock. If you're seeing that setup bullish ICT signature form at 9 a.m. in a market that is already poised to move up, okay, because of all the things that I've mentioned in this video, then that is a safe entry for a paper trade demo account to practice and engage with price, okay? However, if you still are concerned, then you can simply wait for another displacement, okay? And then you've got more fair value gaps, another bullish order block, those 2 down candles, okay, that we've traded above. This is coming back down into those 2 down candles and that fair value gap. And this is now at another key time, which is when the US equities market opens, and that's 9:30 a.m. Okay, so plenty of opportunities for traders to get in on that move to the upside. You don't have to trade this all the way up and get the best exit, even though you can project a target from that consolidation, as I have explained, and have a line on your chart. You just want the easy exit, especially when you're in a week where you have high impact news and a week where it's almost the end of the month, because those types of time periods are when there's heavy manipulation and you don't want to be trapped on the wrong side of the market. So easy exit on any longs at this open of New York will be at these highs, which is exactly what VIP did. We put our trade on 50, 60 pips, locked it, moved away, run away, gone home to play. Now, sure, you can also leave a runner on. So I'm not sure if any of the students left a runner on for higher targets, but this was a very easy, straightforward, no stress, zero emotion trade from the key time, either 9 a.m. or 9:30, okay? I took an early entry down here once all this liquidity was taken, and I'll show you that in my execution video, and simply held up until these equal highs were taken. That was an opportunity that I saw where I could add size because it was high probability setup. Okay, all the elements were there. We had liquidity residing above. We have the bullish ICT signatures in a market where we are posed to move up because the daily time frame is bullish, as well as having the analysis performed early on over the weekend, where I had all the different things, all the different elements in place that I was looking for, okay, as I described in my weekly analysis video, okay? So this week, the market moved exactly as anticipated. We got our movement down to a very key support level, okay, which is this blue line. Go and watch the previous weekly video to identify how I've come up with that support zone. And we also identified this level as potential resistance, but then we went through there and found support at the high of the previous day in that zone. And so we were able to also capitalize on some of that movement up, not demanding to take the exact best exit, even though we did have a range projection because we want to manage risk in this highly elevated risk environment, being the last week of the month and an NFP week and other high impact red news on the calendar. Okay, hope the video is useful. Go back and watch the weekly analysis video from last week. Also watch the earlier video that I posted this week on some of the trades that were done in VIP, the trades we did on Monday. Okay, and now you also have this video that talks about the trades we did yesterday from this New York bullish ICT signature. Okay, and just a reminder to jump on and join the VIP community before price hikes. Okay, next month I will be raising the price from the current launch price of $97 per month to $197 per month, and next year the price will be $497 per month. Okay, so jump on and join us so that you can also learn how to do this the right way and lock in the current launch price, the lower price, which will never be offered ever again. Once you join with that price, your price is then locked in forever, so long as you maintain your monthly membership. Okay, hope the video is useful. I want to talk with you in a future video.